Thank you, Bo and Mark. And we now move on to a key topic I mentioned earlier for our central banking community. How should climate principles be applied to monetary policy? And indeed, can they be and should they be? Chairing the discussion is Gillian Tett, who is editor-at-large in the US for the Financial Times and who also chairs the editorial board. Over to you, Gillian.
Well, thank you very much indeed, John. And I am absolutely delighted to be chairing this session today for two reasons. Firstly, if you dial back a few years, when I was sort of a rookie reporter at the Financial Times in London, it would have seemed pretty inconceivable to be talking about the issues of climate change to this degree, because, the people talking about it were groups like Greenpeace or activists. They weren't the mainstream establishment. And it's worth stressing that because sometimes changes happen so speedily that we almost forget how much the world has actually turned on its head. The second reason why I'm delighted to be talking about this is because central banks, until really very recently, didn't see that as part of their mandate or responsibility. And in fact, when groups like people like Mark Carney and the governor of the Banque de France first established the network for greening the financial system, the central bank and regulatory group that's looking at these issues, initially there were only 6 members. The whole idea seemed pretty weird. And it really was something which people weren't watching at all. Well, the NGFS has now accelerated dramatically in terms of its membership. Almost all the big countries are now members of it, including the Federal Reserve after this year's election or last year's election. And it's getting hyperactive in terms of putting out new policy recommendations, new supervisory frameworks, and new areas for debate about how to turn this growing focus on climate into tangible central bank policy. And next month's COP26 meeting in Glasgow is likely to further accelerate that all over again. So we have 3 terrifically interesting governors with us today who are able to talk about this. We have on the one hand, Governor Stournaris from Greece. We've also got Governor Maklouf from Ireland and Governor Centeno from Portugal. All members of the European Central Bank group, but all in charge of their monetary policies inside their own countries and trying to translate what the ECB is doing into practical action and, of course, contribute to the debate at the ECB and around the world via the NGFS. So perhaps I can start with the very simple question I'm going to ask to each of you, which is this. What exactly are you doing in your home market in terms of your role as central bank governor, trying to turn these issues into practical policy? Perhaps I can start with you, Governor Maklouf, and talk about Ireland.
Thank you, Julian, and thank you for having me on this panel. Perhaps I could just take a step back before I answer your question directly by saying one important thing about central bank's role here, which is what it isn't. And what a central bank's role isn't is to take the responsibility away from governments to actually lead the transition to net zero. Because the regulatory frameworks, the incentives that need to be put in place are ultimately the responsibility of governments. And I think that's a really important frame that we should all bear in mind. I mean, within the central bank itself, there's probably 2 things that are happening. Firstly, we're working with our colleagues on the Governing Council of the ECB to understand exactly what is happening to the economy, what's happening, what's the impact of climate change on output, on productivity, on prices, developing indicators, developing analytical frameworks and models to help us really understand ultimately the impact of both climate change and the transition to net zero on financial stability and the transmission of monetary policy. Secondly, within Ireland, I mean, the Central Bank of Ireland itself is also with the National Competent Authority for Insurance, for banking, for funds, and we're also the conduct. We have conduct and consumer protection responsibilities. So one of the things that we're trying to make sure we're doing is understanding risk, making sure in our supervisory role that boards understand the risks that they have, and making sure, and I think this will be a challenge for everywhere across the world, that we're addressing greenwashing, because my expectation is that there will be a lot of greenwashing, some of it as a result of the lack of standardized reporting, but some of it also downright mis-selling, and we're going to have to tackle that. One of the important things, and Gillian, you will understand this, that I'm doing, particularly in the Central Bank of Ireland, is making sure that we take a rounded view of what's going on and we're avoiding silos, because I think another risk that we have here, not just in Ireland, but actually across the world, that this challenge is seen from different lenses, from different experts and through different silos. And I think that would be a mistake.
Well, that's fascinating. We're going to come back to all of those issues later on, including the greenwashing one, which of course is very much top of many investors' minds. But perhaps I can turn to you, Governor Centeno, and talk about how this is playing out in Portugal.
Thank you, Gillian. Let me start by congratulating UNFIF and SPI for organizing the symposium. In the run-up to the COP26, as you mentioned, increased awareness and overwhelming evidence on the perils of climate change led to the signature of the Paris Agreement in 2015 and to the subsequent, which I think bold, commitments to act by individual countries. Let me introduce this way because it's really important to be aware of the problem and of the commitments that were put in place and we now need to deliver it. Governance must take the lead in the fight against global warming. I'm completely in agreement with my colleague, Gabriel. They have the legitimacy and control over the most effective instruments to deal with climate externalities. Carbon pricing is the critical and most effective tool. Economics tells us this, and we must act accordingly. But of course, central banks and financial supervisors are also part of the response. We definitely should complement, catalyze, and amplify governments' decarbonization policies. And we have been doing a lot already, certainly starting with the review of our monetary strategy at the ECB. This confirms our commitment. I think it's important to act at two levels. At a more conceptual level, we need to adapt our models and methodologies. We need more data in order to assess all ramifications of climate change for monetary policy formulation. And we have been doing this, and this is a strand of work that is quite active right now. At a more operational level, and probably answering a little bit more on your question, prudent risk management of our balance sheet recommends assessing how climate risks affect our counterparty and collateral frameworks, and of course also our monetary policy portfolios. Our success in doing this will critically depend on progress achieved in improving the quality and availability of climate-related data, and we have been working on that quite actively. Central banks, in their typical role, have to ensure that the financial system is robust, to withstand the risks and to take advantage of the opportunities of the transition to a low carbon economy. Let me stress a lot this idea of transition. We must not, we need to disentangle what are the costs of the transition and what is the new steady state that we want to achieve, and we need to avoid mixing the two. To achieve this, we have been pursuing two avenues. Firstly, we are upgrading our financial stability and prudential framework to incorporate climate-related financial risks. Secondly, we are contributing to the efforts of standard-setting bodies to develop comprehensive, useful, consistent and comparable climate-related disclosures. This is our avenue, and I think we need to complete it as soon as possible in a global cooperative way.
Right. Well, thank you. Well, Governor Stornaras, tell us whether you're doing the same thing or whether there's any distinction in terms of how Greece is approaching this.
Many people are asking why central banks are involved into policies in climatic change. They talk about mission creep, that if we do that, we might miss other targets. It's a big mistake for these people to consider things in this way. As we all know, the United Nations have said that climatic change is perhaps the greatest threat to humanity. So we all have an obligation to contribute to stopping this. So central banks have an obligation because climatic change affects both its primary target, that is price stability, its secondary targets, which is financial stability, growth, employment, but also climatic change affects the banking system, the balance sheets of banks through their vulnerability, through the exposures to fiscal risks, to the mitigation risks. So I think it's common sense that central banks have an important role to play in fighting climatic change. Of course, I agree with Gabriel and Mario that governments have to be in the front seat through the tax policy, through the subsidies policy, through the investment policy to fight climatic change. But central banks, I would say, have the second role here, which is a complementary role to that of the government, does not imply any sense of fiscal dominance or whatever. I will not repeat what my two colleagues said about what we do in the European Central Bank. As you know, we agreed in July that climatic change should be part of our monetary policy review. So we have delineated a roadmap of what we should do. I want just to take one more minute to say what we do here in the Bank of Greece. Perhaps some of the people don't know, we are the first central bank in the world to get involved in climatic change 12 years ago. So we formed a committee because we are a Mediterranean country. We already had observed phenomena, weather phenomena like floods, like fires. Unfortunately, the previous summers, we had terrible fires in Greece. In Central Europe, we had floods. So climatic change is already with us. We don't need to prove this now, I think. So in the Bank of Greece, we had a committee of scientists. We have already produced a study showing what are the effects of climatic change on various sectors of the Greek economy, tourism, agriculture, industry. The cost of doing nothing is huge, is 3 times the GDP for the next 100 years. We are perhaps one of the first to know what is the effect of climatic change. We share this knowledge with the NGFS, the network for the greening of the financial system. We are active members of this. And of course, we cooperate with the Governing Council of the ECB.
Well, thank you, Governor Stornaras. I didn't actually know that. So next time I say that the Banque de France and the Bank of England and Central Bank of China created the NGFS, I'll add the Bank of Greece as well, because I didn't realize how active you were so early. So let's talk to some nitty-gritty details about this. You know, you've all said you're doing stuff. You all take it for granted that you do have a right to do this, that this isn't mission creep. Let's start with a topic which is incredibly pertinent for anyone sitting in the UK right now who's confronting spiraling gas prices. To what degree do any of you have models inside your central banks or are working on central bank models which show how climate change issues are going to impact the inflationary outlook in the coming years? Because, you know, starting with your core mandate, which is to keep prices stable, you know, do we have good data on what both the impact of climate change, but also what the regulations to try and deal with the effects of climate change might be doing to price stability going forward? I should say, by the way, if anyone in the audience wants to ask questions, do please go ahead and ask them, and we'll incorporate them into the conversation as we go along. So maybe I can start with you, Governor Stournaras, given that you've been working on this so long. Yeah. What is green, or what is climate change going to do to inflation?
Okay. Some years ago, we didn't know exactly what was the net effect. I can tell you now that climatic change has a positive impact on prices. That is, the price level will go up through carbon pricing. As I said, we need to increase the price of coal, and we need to subsidize other forms of energy, clean forms of energy. But the net effect in the short run is to increase the price level, and for the short run to increase inflation. This is not necessarily the case for the medium term, because it's a supply shock. Of course, we know that in the medium term, the clean forms of energy are perhaps cheaper than coal-based energy and fossil fuel-based energy. But this will take some time, because to be based on completely on clean forms of energy is not possible at the moment.
Yes.
You need storage capacity, which we don't have. We need to innovate on the technology of batteries, which we haven't done so far. So it will take some time to move from fossil fuel energy to clean forms of energy. In between, natural gas is being used. That's why, I mean, the prices of natural gas are very high now, much higher than before. So there is a positive impact on the price level. This is because of the transmission mechanism. When the net emission cost is high, the coal emission cost is high, then there is a substitution with other forms of fossil fuels like natural gas. So natural gas prices are up. Of course, taking into account the supply constraints coming from producers of natural gas. So just to be precise, I think in the short run, there's going to be a positive impact on prices, but in the medium term, we don't exactly know. It will be only a relative price effect and not an effect on inflation.
Mm-hmm. What about you, Governor Makhlouf? Have you looked at this inside Ireland?
Well, I think a lot of the work, I mean, I agree with what Yanis has just said. I think the reality is that we don't have models that understand as well as we'd like to the impact, not just of climate change, but in particular of the transition to net zero. And part of the work that the ECB announced in its action plan last July is to develop that sort of framework. I mean, I think the reality is that, as I said, I agree with Yanis. I think, on the other hand, the medium term could be some way away. And I'd expect if you think of the IMF published a report last June, which talked about carbon pricing. And I think all economists will tell you that is absolutely the sort of foundation stone that needs to be put in place to create the right incentives, the right framework for economies to adjust. I think the IMF said that by 2030, we needed a carbon price of around $75 per ton.
Yeah.
Right now, the average price per emission is around $3. I mean, that just helps to give you a slight sense of the scale of what needs to happen. And that's bound to have some effect in that period on prices overall.
Right, right. And Governor Centeno, would you have any views on that?
Well, I agree that that we need to know more. Research in this area is now very, very valuable, and we are including it in our agenda for research. Pretty much the same thing, and aligned, of course, with that what is being done at the ECB level. I can tell you, for example, that we signed a new contract last year for the supply of electricity in the Bank of Portugal, which is now from 100% renewable sources. there is a transition cost here. I think I agree with Gabriel that we still don't know how far the medium term will be, but we need to be consistent. Consistent meaning having a degree of patience in the transition period to accommodate both the adjustment in energy sources, but also in terms of technologies. I believe that those will be temporary, so we will really achieve a new steady state at some point. And if we include sustainability premia and concerns in the process, we think that this transition can be faster indeed, and it will work as a balancing device among alternatives. We cannot, hesitate at this stage. The involvement of central banks has also to do with the impact of the transition in our mandate and responsibilities. I think we are here to stay in this business of climate change, and we need to continue quite, again, coordinated, comprehensive, and global action. There's no way we can fight this individually. We actually have a very good experiment and actually very difficult globally, which was this sanitary crisis that we faced. I think we need the same sort of commitment, the same sort of coordinated action, and again, also no signs of hesitation towards the future. I know that politically this is difficult because it involves a lot of agents. Take the ups and downs in terms of the US political stance on this, but I think the world will stay united in this front. As usual.
So, turning away from the monetary policy question to the question of financial stability and the question of your oversight function for the financial system, to what degree do you think you have the data at the moment to assess climate risks to financial stability, how it's impacting banks? And are you wanting COP26 to be used as a moment to, say, impose TCFD on everybody, or impose some unitary, unified accounting reporting system on the banks? Is that what you're pushing for as central bankers and given your regulatory functions? I can see you're nodding, Governor Centeno. Maybe I can ask you first.
Thank you, Gillian. Well, it's true. The lack of granular, prospective, and verifiable environmental information persists, especially in small companies, and this is still a concern. Measures that we are taking included in the regulation and supervision of the financial system include ensuring credible and comparable information. This is a big effort. Standardized disclosure of environmental data by companies. We need to press on this. And finally, correspondence with a global accepted taxonomy, which actually involves all these issues. And this will certainly contribute to a better assessment of climate risk and the environmental impact of companies by stakeholders, consumers, and investors. For central bankers, this is very important, certainly, as I mentioned before, because we need to take care of our balance sheet risk, but on a more global way, we think this is the way to go, and markets must indeed internalize all of these factors. As I mentioned before, if we do this, and if sustainability concerns are really priced into markets, the transition will be much faster. We don't want it to be too fast, of course, in order to be, dramatic or to increase concerns over our ability to do this transition, but no hesitation. That will be my buzzword today.
So, Governor Makhlouf, when you look at, the Irish banking system, do you have any confidence that you have a sense of how exposed they are or what the risks are, and how that might impact the system in the future?
I don't think I have as much information as I would like to have. And certainly, I'm not sure that the institutions working within the financial system in Ireland have as much information as I would like them to have, and they would probably like to have. So that is one of the, and I don't think Ireland's unique here. I think it applies across the world. And I mean, I expect all the firms that we regulate to have a very good sense of the risks that they are carrying from climate change directly, but also from the potential transition itself. And I'm conscious that we need to, as the competent authority, we need to improve our own capability on this. What I'm pretty sure, if I can go back and because I agree with everything that Mario just said, but you asked about the sort of what's the sort of ask from COP26. My expectations, have been managed probably appropriately, but what I would probably put top of my list is carbon pricing, and I'd have a very close second. I'd put one word, which is standardization, standardized reporting, standardized valuation principles, something that will help companies, regulators, investors, consumers actually understand the scale of the challenge, because it is huge. And I think one of the political challenges that politicians have, is to help communities understand the scale of change that needs to happen, which is very significant.
Right. Just before I turn to Governor Zonaras, I'd like to ask you, do you have a favored set of accounting standards? Because we have a lot on the table. We've got the, SASB, TCFD, GRI, CDB. There's more being created. I used to joke when I covered finance and credit derivatives 15 years ago that I couldn't imagine a sector which would produce more acronyms. And I have now discovered it, and it's called the climate change world. But do you have a view on which particular acronym is your favorite acronym in this, alphabet soup?
Well,
or by either of you.
Let Yanis start.
Yeah.
Taxonomies now is being prepared by the European Commission. So there's a lot of preparatory work for taxonomy, for transparency, for accounting. It's on the way. But I think the most important thing, as my colleague said here, is to make people aware of the need to act from very, very simple things. Insulating their houses, for instance. So central banks, they have a role in informing people about the risks, but also what they can do. Now, as central banks, I think it is very important to develop supervisory expectations for commercial banks and require them to embed climatic change in a holistic manner in their business plans, in their strategy, in their risk management framework, etc., etc. So there are so many things that can be done. Now, as you know, in the roadmap, we have decided we have to do we have to act on our ANFAS portfolio, that is on our own assets. We need, of course, to apply the taxonomy that is being prepared by the European Commission to avoid greenwashing. But I would also add that the opportunity is for a green capital markets union and the development of green bonds and other kind of climatic change bonds to mitigate risks. So there's a lot of work ahead of us in incorporating all these tools in our armory, but accounting principles and transparency in this is extremely important.
And do you care whether it's SASB, TCFD? Do you want to just use the green taxonomy created by the Commission? Do any of you have a view on this? Pick your favorite alphabet soup.
No, sorry, I don't have a view on this, no, because I haven't seen the final result yet.
Right. Either does Ireland or Portugal have a view?
No, other than that we need an alphabet as opposed to a soup of alphabets.
Yeah, well, I can tell you, I think we feel that way as well at the FT. Okay, I've got two other questions. Then I'm going to turn to questions from the audience. We're getting some really, really interesting questions from the audience right now, which I think will be quite a challenge. But two other big questions. One is, you said, Governor Stonaris, that you want to align your portfolio of central bank assets, your balance sheet, with the green taxonomy, which raises questions. To what degree do you think the central banks should be actively using, say, asset purchases or green portfolios or their portfolios to actively try to accelerate this market transition themselves? Should we have deliberately green QE to try and, actually act as a mechanism, a catalyst for change, or not? Do you have views on that, Governor Stonaris?
Personally, yes, I do have a view. I will be positive on that, but we have not decided yet at the ECB Governing Council of such a move. We have only decided to act in concert regarding the ANFAS portfolios, that is our own portfolios, our own assets, the national central bank assets. So to act in unison according to certain principles. We have not decided yet to do the same in our monetary policy portfolio, but my personal view is that we should do that. I think we have an obligation to do that, but provided we have clear rules from the European Commission on the taxonomy and accounting principles.
Do you have a view, Governor Makhlouf or Centeno? Because, of course, at the moment, the taxonomy is controversial. Issues like gas and nuclear are grey areas in that green taxonomy. And, it's not entirely clear where they're going to stand eventually. I mean, do you have a view, Governor Makhlouf, about whether Ireland should actually be activist rather than simply trying to manage risks?
My view at the moment is that I wouldn't go as far. I mean, I agree with most of what Yanis just said, but I probably wouldn't go as far as him for the reason you just said, Julian, which is that we don't know enough. And certainly from an ECB monetary policy perspective, our prime objective needs to be price stability. I mean, that's the mandate that we've got from the treaty. And our work, our understanding of climate change issues and the transition have got to be understood primarily in that context. And at the moment, I just feel that we don't have enough information to say we can be activist. I mean, I'd be worried that we may be making wrong calls. So I think, a lot of what in our previous conversation was really about getting all of us to a base point from which we can make those sorts of decisions. Because in principle, Yanis is right that, if this is the direction that the world needs to go, and if this is actually going to help us manage the impact of climate change on monetary policy, on financial stability, then we can't be passive about it. But at the moment, I worry that the path is not as clear as it needs to be.
Right. Governor Centeno, do you have a view on this? Where do you stand between these different views?
I can add only a couple of points. I am in broad agreement both Yanis and Gabriel, but I would like to stress my view that a worldwide solution is crucial on this. I don't think individual countries, not even the largest countries in the world, can do it on their own. The G20 can be a very good solution on this respect for us to get to a common position. But I agree, Gillian, your question hints of the hurdles that we really face. The heterogeneity across countries is one of these hurdles. I mean, due to the urgency of this problem, probably looking at hybrid solutions in which simultaneously a system of emission allowances and carbon taxes can be an effective way to get into something that resembles a price on carbon that can allow us to move ahead, but no country on its own can do it. Portugal is pretty much in the forefront of using renewable energy sources, being it wind, waves. We are really a leader on that process, but again, this will only have an impact in the world if it's extended to other countries. We are a peripheral geography. In geography terms, we are in the periphery of Europe, but I must say that globally there is no concept of periphery. And we must think globally indeed.
Well, you're all in the periphery of Europe. That's what kind of unites you. But we haven't got Finland here as well. But in terms of, the other question I wanted to ask you all was about greenwashing. Governor Makhlouf, you said that you thought there was likely to be quite a bit of greenwashing, both because of accounting uncertainty, but also because of deliberate fraud. What can be done to stop that and to reassure the public that it's not going to essentially poison or muddy the entire endeavour?
Well, I think probably two things in particular, Julian. One we've talked about quite a bit, which is the whole issue of standardization, actually of transparency, so that all the players understand the language that's used, understand the investments that are being made, etc. So that's a huge area. But the other one is that regulators and supervisors, people in my own central bank, actually do their job and supervise and regulate appropriately and ensure that firms are just applying best practice, which is what we'd expect them to do anyway. So this isn't necessarily a new thing, but I think we've just got to be pretty rigorous. And obviously, I said two things, but the foundation of both of those is that the firms themselves understand the investments they're making, the propositions they're making, the products they're selling, etc. But the reality is that nobody can guarantee today that some form of greenwashing isn't going to happen, because when you've got this difference, all these differences in standards and interpretation and understanding, some things will turn out in one person's eyes to be greenwashing, which in another person's eyes is just a risky investment. This is a pretty important territory. So I'm being realistic here in terms of how I look at the issues. Right.
Governor Stornaris, I'd like to ask you about this as well. And I'd also like to ask you particularly this question, given that there is a difference or divergence between the way that, say, America is looking at standards and developing standards and the way that Europe is. I mean, Europe, there's essentially a top-down bureaucratic approach where you're essentially creating quite a rigid framework, somewhat backward-looking, which is going to be imposed. In the US, there's more of a kind of bottom-up, market-led approach to try and create standards and definitions. The American approach risks being captured by the bankers and by the financial market actors. The European approach risks becoming a bit like the green version of Basel II regulations, which bankers will immediately arbitrage. I'm kind of curious as to how you see this debate going.
I think we can use both. I think so. I don't think any contradiction between the two. In Europe, Europe is a bank-based financial system, so banks need to have rules, as Gabriel said, accounting standards, transparency. In the United States, the financial system is based mostly on markets. So I understand that it is bottom up. But I mean, in Europe, we can also. I'm very much in favor of using green bonds to develop a capital markets union. Green bonds are the most used cross-border bonds, more in Europe than in the United States. I don't see why we can't use both methods actually in Europe, both from the top rules from the European Commission, other bodies, but also bottom up. I know in the financial markets, they are developing standards for green bonds and other similar instruments, not exactly the same, but so I would think that we can use both in Europe, actually.
Right. Governor Makhlouf, you often end up being sort of caught in the middle between Anglo-Saxon world and the continental European world, both physically and actually also spiritually, it might be said. How do you see this tension between the Commission approach and the Washington, American Wall Street approach?
I agree with Yanis completely. And I take this tension of being caught between these two worlds as a very positive thing, actually. I do think, especially in this whole agenda, and in the light of everything that we've discussed so far, I do think that what you described as a sort of top-down approach actually is necessary, or certainly some degree of it is necessary. On the other hand, I also think that we want to allow innovation to happen, because there will be ideas out there that actually markets are best placed to discover. So it's about getting the two working as well as possible and making sure the infrastructure to enable that around rules, etc., are pitched at the right level.
Right. We got some great questions, so I'm going to jump into this now straight away. First of all, very good practical question from Adriana Pierelli, who says, all of you have talked about, the distinguishing between the short term and the medium term in terms of looking at inflation risks, or rather the outlook, for inflation. The idea being that in the short term, both climate change and the response to climate change is going to be inflationary. In the medium term, less so, perhaps. What is your definition of medium term? That's the question. Are we talking like 2 years, 20 years? Governor Makhlouf, do you have a view on that?
If we're talking about climate change, it's longer than 2 years, because at the moment, it's not obvious to me that governments are moving at a pace that will introduce that the transition to net zero will start to accelerate and be seen in inflation. So for me, it's definitely longer. And the reality is that right now, the other dynamics we're seeing around coming out of the pandemic, around energy prices, etc., are going to be much more dominant in inflation than climate change itself.
Right. Governor Centeno, I mean, you say you just renegotiated the Bank of Portugal's energy contracts, which probably that created some inflation. If you're using renewable now, I don't know, but how do you see medium term defined?
I already mentioned that the medium term that we are referring to will be further away from us than the usual medium term concept that you use when analyzing pressures to inflation or transition in economics. I think it's a good thing if you can make progress. And as long as you, as we make sure that we make this progress, we are converging to this medium term, so we can actually see the medium term in a way. People, when looking ahead and establishing commitments to the future, they fear that these commitments are too far away from today, that we cannot, that we cannot actually have someone accountable for them. That's not true in this case, because we need to actually see progress every single year. And as soon as this progress exists, we can be sure that we are converging to this medium term. But the medium term will be, I agree with Gabriel, much further away than 2 years, the simple standard measure that we use for medium term.
Right. Governor Stenaris, do you have a view on this?
Well, this is a very important question if you want to answer it in a methodological way or in a standard central banking language. Well, in the central bank language, short term is next year. Medium term is 3 to 5 years. But from a philosophical and methodological point of view, when we talk about climatic change, medium and long term is very, very long. And this is the problem. This is why markets fail. This is why perhaps I failed to say that in the beginning, in my introduction, why we take measures for climatic change, why governments need to take measures, why central banks need to take measures. It's because markets fail, and markets fail to price correctly the risks for 2 reasons. We have in the jargon, we have called these 2 failures a tragedy of the commons and a tragedy of the horizon. I'll start from the second. Tragedy of the horizon means that the effects of climatic change take place cumulatively over a long period of time. For instance, in the study of the Bank of Greece that I referred to for the next 80 years about the effect, it's a non-linear. I mean, in the beginning, the cost is linear, then it becomes very sharply increasing. So this is the problem, that in the horizon of companies, of banks, of central banks, we take into account in our risk management frameworks a relatively short period compared to the needs of the climate, of taking measures for the climatic change. This is why we act, actually. And this is why the medium and long term, from a climatic change point of view, is much longer than the medium term of a central bank used now. This is why now central banks want to incorporate climatic change in their models to see what it means for the medium term. We start having an idea of what is the effect on inflation, etc., etc. But it's an important question, and we need to know that it is this failure that forces us to act, actually, that it's a cumulative effect which takes a long time. But if we don't act now, the disaster will come very close to us.
Well, as you say, Governor Stenaris, one reason, of course, why it's so relevant for Greece is that sitting in the Mediterranean, surrounded by the fire risk, drought risk, it feels very, very immediate. But I'd like to turn to really one of the questions I started with, which is it right and proper for central banks to be involved in this? Because we've had a series of comments from the audience saying things like, one question from Kathleen Tyson, do central banks risk their independence by taking unilateral decisions to act on climate change without a change of statutory mandate? I'd like to ask you that. I've got a question from Herman Kais, who says, the ECB has just got one task delegated from the political leaders in Europe, which is price stability. there is neither any democratic election nor responsibility to the ECB to support any political agenda such as climate change. We have a series of comments like this. And in fact, the organizers have done a poll of people watching, and there is a vast audience watching this right now from around the world, which shows just how tortured and tangled this issue is. They asked, should there be monetary policy incentives for a green transition, and will this be effective? And 68% said yes, 2/3 said yes, 32% no. So 2/3 think you should have monetary policy incentives to be activist because they think it's work. They also asked, should climate mitigation be factored into central banks' investment decisions, i.e., should you be involved in this from a risk management perspective as opposed to activism? And 87% said yes. So strong support for risk management and fairly strong support for this idea of being activist. But then they asked, are central banks overstepping market neutrality in implementing climate mitigation frameworks? And 68% said, yes, you are overstepping market neutrality. Do any of you have any thoughts? I mean, you could say that's contradictory, or you could say that we should just call a spade and just say central banks are going to overstep their market neutrality and just interfere to try and support this agenda. Any of you got any comments on this? Perhaps I can start.
I can very briefly step in if you allow me, Gillian.
Yes, please.
Okay, this apparent paradox is very typical on policy action. Believe me that today it's not a unique feature of this issue. This is a global problem, and it requires a coordinated approach. There is no room now for coordination failures to be called upon by governments, central banks, any other political agent in the world. We don't have room for that. So we need to involve different geographies, different players. Again, governments are in the front line. I want to calm those that are concerned about central bank independence. But the impact on our mandate and our responsibilities, our is central banks, of course, justify our involvement in the fight against climate change. This is true in financial stability and supervision. This is true in terms of monetary policy. We need to frame it very well. I think our recent review of monetary policy strategy frames this issue very clearly. I think everyone is aware of what we are concerned about, of what our limits of action, what we will do. This is how we defend and protect our independence. But believe me, we cannot stay out of this, as the two first questions in your polls clearly point out. I think really no one can, so that's where we are. Thank you.
Right. Well, we're getting close towards the end of the session, but I'd love to hear from Governor Makhlouf and Governor Stornaras how you make sense of these contradictory findings, and whether, how you would answer people to say you have no political mandate to do that. You've each got about 2 minutes to tell us your thoughts on this. Why don't we hear from you first, Governor Makhlouf?
Well, I think we absolutely do have a mandate here, because the reality is that climate change itself and the transition to net zero itself are going to have an impact on the way economies work. They are going to have an impact on productivity, on output, and on employment. And they are going to have an impact on price stability. So for me, that simple proposition is very clear, and we can't ignore it. That's not taking away what I said at the very start of this discussion, which is I think it is the job of governments to lead the response, not central banks to lead, but we've got a very, very important role to deliver our mandate. And on the point about market neutrality that somebody made, for me, it's also very, very simple. The markets cannot work for the reasons Yanis was saying earlier, because of the tragedy of the commons, and in particular, the tragedy of the horizon. So therefore, I think market neutrality can only work, for me anyway, if there's enough information for everyone to make the right set of judgments in time, and they can't here. So you do need intervention of some sort. And one of our colleagues on the Governing Council, Isabel Schnabel, has talked in the past about market efficiency. And I very much agree with her on that. So I don't have a problem. I mean, I completely understand the risks that people are flagging about our independence and our mandate, but I am completely confident that we are working within the bounds of what the treaty allows us to.
Right. So you don't think you need to have any change in the treaty? If I turn to Governor Stonaris.
No.
Governor Makhlouf.
No, I don't.
Right. Okay, Governor Stonaris, you've had, since you said that Greece started before everyone else, you must have had a lot of practice asking questions from voters and parliamentarians or answering them. So what do you say to people who say, actually, you're overstepping your mandate and you are, overstepping the idea of market neutrality, and this is wrong?
My two colleagues, both Mario and Gabriel, they have answered that we have a democratic legitimacy for that, because climatic change, as they said, they affect our primary goal, which is price stability, but all other goals which affect the economy and also financial stability. So definitely, from a formal point of view and the democratic, let's say, accountability point of view, after all, we all talk to our parliaments. The ECB talks to the European Parliament. We are responsible to our national parliament, so we explain what we're doing. So it's not a lack of democratic, let's say, authorization of what we do. But I will answer in a simpler way as a commoner, not as a central banker. I mean, if climatic change, according to the United Nations, is the biggest threat to humanity, don't you think that, or I'm not addressing to you, but to all those who have asked this question, don't you think that it's our moral duty, with our huge firepower we have as central banks, to contribute to alleviating the effects of climatic change? Or some other people, they think that we live in a fantastic first best world, as we say in welfare economics, so that governments do one thing, central banks do another thing, commercial banks do another thing. No, unfortunately, we don't live in such an ideal world. So if we have such a huge risk to humanity, we have a moral duty to intervene.
Well, thank you very much indeed. Well, I must say I found this a fascinating discussion. Before I became a journalist, I was trained as a cultural anthropologist. And I'm always very interested in the cultural framework and assumptions that shape us. And it's the truth of almost all societies that whatever framework and zeitgeist we live in, we think is normal, natural, and permanent, and it never is. It changes. And you just have to think about how attitudes towards, say, inflation targeting have changed to see that the zeitgeist around central banks has shifted over the decades. Inflation targeting used to be seen as a sort of weird, rather outlandish thing that only a small country on the real periphery in New Zealand would actually do. And now everyone does it and thinks it's permanent and normal and inevitable and natural, and thinks it's weird if you don't. So I am very curious about whether there is going to be a similar kind of shift around the climate change issues. Clearly, we are at a very interesting transition moment with masses of debate around this. I should say that we at the Financial Times have been covering this pretty intensively. Governor Stonaris said that the Greek Central Bank was one of the first to jump into this. I'm proud to say the Financial Times was arguably the first amongst the mainstream media to create a dedicated platform to look at these issues. It's called Moral Money, and it's a twice-weekly newsletter that I co-created a couple of years ago, looking at these themes. So do sign up and have a look at it if you haven't yet. Moral Money, FT Moral Money, if you Google it. And we are covering this a lot on a day-to-day basis. But the debate is still at a very early stage. It's going to accelerate in Glasgow in November. There's going to be a lot for future historians to look back on. So it just remains for me to say a big thank you to all three of you, in the periphery of Europe geographically, but in the very center of these debates, and to wish you the very best of luck in terms of navigating a path forward that will both win popular support and be effective at these at this very important moment. So thank you all very much indeed. And I will now hand over to the organizers for the next round of debate about how to turn this into practical action with the MFIS conference. So thank you all very much indeed.